Happy Monday, traders. Big echo, just 1 second. All right. Happy Monday, traders. It is 8:01 a.m. on the 15th of April, 2019. Happy tax day for everybody. Dreadful day. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, where's my stuff? It's not a good way to start, right? Where's my stuff? My quote board disappeared. But it's looking like we didn't go anywhere, really. In the overnight session, the S&P only had about 5.25 points of range. The point of control is 29.1050. So fairly quiet. The overall sentiment, it's mixed. The small caps are up a little bit. The tens, the bonds are slightly down, and it's just a mixed bag. The Nasdaq's just slightly down, and so on. Euro stocks are down. Overall, really, there's no clear direction or sentiment towards risk or about. It's really about holding steady where we are. The S&P is right against Friday's close, so not much there to talk about. So sentiment is really neutral this morning coming in. In terms of what's ahead of us, there really isn't much today. Balance of trade comes out this evening for Japan. The rest of the week, oh no, actually that's tomorrow. Today the calendar's fairly clear. Tomorrow we get the zoo sentiment from Germany at 5 a.m. Eastern. Balance of trade in Japan at 7:50 Eastern. Wednesday, the key figures are inflation in the UK, in Great Britain, balance of trade in Canada, and the US balance of trade. Thursday, market manufacturing PMI out of Germany, retail sales in the US, and inflation rate in Japan. And then and that's it. It wraps up our week. So this week is relatively light in terms of releases. We do get FOMC. We get a rate decision on May 1st, 2 Wednesdays from this week. Until then, there's just we've got some peppered in second tier numbers. Okay, so looking at knowing that that's what we have, let's move directly into the review segment. On Friday, the expectation coming into the day, we had gapped up. We were trading at about 29.10 at that point, and the idea is that with the overnight high being 29.1175, 29.12. The expectation is we would push through to about 29.14, the top of that stock zone, and then push back down to about 29.08 before the market starts to move through 16.75 to 20. Couldn't do that. It did hold the 14-ish area, and then scenario 2 actually looked like it was more relevant, push to about 14 and then get down into 29.03 to hold sideways. So scenario 2 appears to have played out. Here's the top, 29.1475, so 3 ticks over, and the low is 29.0250, 2 ticks below the expected low, and overall a double distribution profile, and a gap that's left open. We left a gap down here on Friday. We just couldn't fill it, and we turned back up. We did not go neutral on the day. but it did do a good job of getting back into the IB above the mid, above the open, above VWAP, and closing above the point of control. And it seemed to close relatively bullish. There wasn't much in terms of reversion back, responsive selling back into the prior day's range, at least to 28.95. So overall, fairly bullish open, fairly bullish action despite the sell-off here. So what played out on Friday is scenario 2, almost to the tick at the top and the bottom. Missed the top by 3 ticks, missed the top by 2 ticks, not bad. Well within stop distance. So that's what we're looking at. This pattern here, where it just drops, consolidates, makes a lower lower continuation, and then gets into a corrective mode. This pattern generally, it did run out of time, but generally this would have likely led, if this had happened earlier in the session, it probably would have led to a neutral day up, a neutral extreme close, which would have been very, very bullish. This morning, as you can see, we're trading currently right here, 29.13, right in the upper distribution, and the overnight session tested lower, but didn't even quite get to the low volume node at 2907.50, 2907.25 actually. So couldn't quite get low enough. It's really, really hard to see how this thing is going to accomplish anything today in terms of discovery. So looking at things. Oh, let's get rid of this. Looking at what it did overnight, opened up, pushed up, and then just completely sideways. Again, a very tight range. Volume is really low. Volume's way off. It's off about 30%, 35% in the overnight session versus the last 20 days volume for the overnight. So it's just very, very poor, with a completely balanced profile with the point of control. Very sharp point of control, 29.10 a quarter, I think. Let me see what that is. But 29.10 half. Pretty sharp point of control, but overall very, very balanced. This could go either way. So since it could go either way, we're not getting anything from the day time frame. From the day time frame, we've got from the intraday time frame. We've got to go back and see what we've done in prior days and assume, because we have to assume something, assume that this is consolidation flagging for potential to push higher again. 29.20 is the next target up. That's what that's shaping up to be. In terms of, I was going to show my fundies chart, but for some reason, it's causing a crash, so I can't pull that up. I was going to look at the SPX, put call ratios, and so on, look at the bigger picture a little bit, but I'll skip that in favor of something a little more stable today. So let's take a look at what we're expecting for today, just to cut to the chase here. Again, this chart might look busy to you. These are my stock zones. These are key areas that I'm expecting the market to experience a reaction in. Those are the areas for me to do business. These are available to Convergent members, part of their subscription every day. And they're truly where I believe the market is likely to test. So you could see these stock zones. These stock zones are generally pretty decent areas for the market to turn around. They may push through by a little bit, but in general, well within a stop distance. This morning, looking at an open auction in range, in value. If there is value on a double distribution, there is value on a double distribution because it's really Gaussian here. Look at that. Just very, very well distributed. The expectation is an open auction that drifts down, gets back into 29.1050. 29.1050 is the overnight point of control and Friday's point of control. I'm expecting it to run into a little bit of trouble here, and then I'm looking for it to turn back up once it tests lower, take out this 1475, test 1675, consolidate here for a little bit, attempt to poke, and finish in the middle. Mondays are the lowest volatility days historically. They offer the least amount of opportunities. The second day in line is Friday. The best day is Tuesday. The second best is Wednesday. That's based on historical a test of historical ranges. Going back 1,500 days, I believe. So that's 1,500 days. That's 12 years, something like that. No, 6 years. It's about 250 days, trading days a year. That's the primary. Secondary open auction that pushes up into 1675, gets whacked a little bit, moves back into the point of control, attempts to get back out, and then starts to shift down into the low volume node, 2907.50, and then begins to climb down into the next high volume node area before the bounce. In either case, expecting a higher low, higher high, with scenario 2 finishing on the low side, scenario 1 finishing on the high side. Scenario 1 plays into the higher lows that we've been experiencing. One time framing up for about 4 days recently. Okay, so that's that. Not much more to say here other than be patient. I mean, the ranges, we're in a rally market. The ranges are going to collapse. The volume's going to collapse. Vol collapses. It's tough for everybody except for the buy and holder who's just sitting and waiting for this thing to continue to go higher. It's not a day trader's market currently, but it doesn't mean we go and learn carpentry or something. We still need to sit here because ultimately a consolidation, compression, and balance leads to imbalance, and we need to be here for when it happens. The important part here is to make sure that you're following some clear description of where you should act. So you should know coming into the day where you're likely to act and what you need to look for in order to act. So you're not doing all your analysis and thinking in the moment of execution. The moment of execution is sacred for traders. It is a time to act, not think, analyze, check 6 charts to put something on. You're taking on too much price risk when you do that. You're looking for more and more information. And in this type of market, it really doesn't yield that much range in order to sit there and do your analysis on the spot. Just study what you want to do. Create plans for what you think you'd like to do when the market does what it does, and then just execute and let it go. That's what I'm doing here. Good luck today, and I'll catch you tomorrow. Take care.